As Chinese President Xi secured another term, Asian stocks saw a sea of red. And that's in part due to fears of further US Federal Reserve hikes. New US jobs data is also set for Friday, which could change the Federal Reserve's course on interest rates. And the Fed's tighter monetary policy has hit venture capital real hard. That spelled a steep dive in share prices for Silicon Valley Financial Group, which handles money for half of listed tech and healthcare startups in the US. It's selling $1.75 billion in stock to shore up its cash reserves. SVB is reassuring customers they won't lose their money, but some major startup funders have pulled money out. SVB says higher spending by its startup clients led a fall in deposits. Bank stocks took an $80 billion beating Thursday in the US, including a $22 billion hit to JP Morgan's market value. For more on this now, let's go to Craig Earlham, Senior Market Analyst at Oanda in London. Craig, many thanks for being with us today. So first of all, can you help us understand and make sense of what's happened to Silicon Valley Bank?
So, ultimately, this is a case of fear. It's a case of what could happen. And when we started to see deposits being withdrawn and the bank had to ultimately raise capital, what happened is that they had to therefore sell assets in order to try and raise that capital. And as a result of that, and these assets being out of the money, as it were, what that means is they had to raise capital another way. That could come from deposits, or it could come from trying to sell stock. And that is what the bank has tried to do. But the outcome of that means that they have ultimately caused fear in the markets, and that's led to further withdrawals. And it's got this negative roll effect.
Right. And Craig, I also think, obviously, the bank had a lot of bonds in the portfolio, right? And the yields are going up, prices are going down. Obviously, that leads to losses, as you said. But I really wonder, what would the consequences of an SVB collapse altogether be on the Silicon Valley infrastructure? Because I understand this bank is really startup friendly and very important for venture capital as well.
It is, but I guess it's a case of not just what it would have on the actual industry itself. It's a case of what impact it would ultimately have on other institutions, and whether it would lead to deposits being withdrawn elsewhere, and whether it would lead to activity in other healthier banks in order to try and shore up their own personal balance sheets, and in order to try and restore confidence in the markets. That's where the difficulty arises. It's not just about SVB Bank. This is where the story has started. But the fear in the markets, and that's why we've seen this broader sell-off, relates more to what this ultimately means elsewhere, and whether it can have those contagion effects, which we've seen before can be quite devastating.
Absolutely. Let's hope it doesn't come to that. Craig Earlham, thank you very much for your analysis today. And now let's go to other top business stories from around the world. Former Goldman Sachs banker Roger Ng has been sentenced to 10 years in prison by a US jury. He was convicted of helping loot money from Malaysia's scandal hit 1MBD sovereign wealth fund to bribe government officials to win business. US prosecutors say more than $4 billion was embezzled by officials, bankers, and their associates. The United States has imposed sanctions on 39 entities that Washington says are facilitating Iran's shadow banking network. The US Treasury Department claims those on the new sanction list are giving access to companies previously slapped with Iran-related sanctions into the international financial system. The latest move against Tehran comes as efforts to revive the 2015 nuclear deal have stalled. And General Motors is offering voluntary buyouts to most of its US salaried workforce and some global executives. The move comes as part of a previously announced goal of $2 billion in cost cuts by the end of next year. The car maker expects to take a pre-tax charge of up to $1.5 billion related to the buyouts. And that is all from business for now.